Hey guys, Mike here. So another big week ahead, and this video is loaded with stuff. So of course we're going to have major economic news coming out this week. Will actually absolutely move markets. A lot of more earnings coming out, and I'll give you the expected moves on those for who like to play earnings, or if you hold the stocks, you know what to expect. But also we're going to go into, like, this is a big month for Tesla. I'm going to show you why. Okay, you'll see saying seasonality is great, but I'm going to go back and just show you very quickly the last 10 years, which surprised me, by the way, of how it performed in June. So make sure if you own the stock, looking to get in the stock, pay close attention to that. Again, you know, I shortened it down for you, but we like to look at the chart so you can visually see it yourself. Okay, not just some thing saying, oh, in June it does this on average over the last 20 years or whatever. All right, and then we're going to get into a couple more stocks, but then also the S&P. Something big happened on Friday, if you didn't notice, which made some people millionaires. So we're going to get into that as well, and why the S&P could continue to move up from here if a couple things happen. Now, when you look at the S&P right here, you can see clearly we are below or right at the 5-day moving average we talked about. We also talked about how 5,200 Thursday was in play for Friday. Why? Because we were showing weakness and we broke down past the previous all-time high. But if you look at this move right here. 1.64% after lunch, but here's the big one. This is what made people millionaires. 0.9% on the SPY, even bigger on the Qs, and people, like, somebody put 150,000 options in right at the last 30 minutes, made like $3 million bucks. There was a bunch of those coming in, because that's how you make money in options, is gigantic moves in a very short amount of time. And that was huge. Actually closed above what? The previous all-time high. Okay, and so that was we'll see if this is going to continue, because that is a big move to digest. Again, we need to get over that 5-day moving average, but the fact that it retested 5,200 and bounced from there is no coincidence, so that is strong. A couple things that need to happen here. One, this right here. You're seeing the version of what the SPY is doing and what the equal weight ETF RSP is doing, right? Higher highs on the SPY or the S&P, lower highs on the RSP, okay? So that needs to turn up. You've seen this before. If we look down here, you saw the same thing going on before we went on this nice little run right there. You had diversion happening, and then all of a sudden the RSP turned up. All these other stocks started cooperating, and bam, you know, we took off. Here they were in sync. There's the diversion right there in that area, right up here, as you can see, and it ended up taking off. So if that actually stops and you see other stocks start to participate like there, then of course we will continue to move up. Another thing to look at is this is S&P stocks above the 200-day moving average. Right now, very strangely, we're in this range since December. Okay, up at 80, stock market goes sideways or down. We hit 63 on it. All of a sudden, we start to bounce and go up. Okay, and we'll pull up the SPY so you can see what I'm talking about. And like I said, even when it hits a top, because we're in a bull market, doesn't mean that stock market is going to come down, all right? Because especially since we're so heavily concentrated in so few stocks right now, as you can see, when it hit right here, started to come down in the red, the market basically dipped a little bit, or basically just traded sideways, right? If it wasn't so heavily concentrated, we would go down a much farther than this. But because of the MAG 6, 7, 8, 9, 10, whatever we call it, it doesn't. Now it hits 63 and bounces, right? So now all of a sudden more stocks are moving above their 200 moving average. And you can see the stock market, the S&P, the Qs went up farther, but the S&P goes up, okay? And the S&P is nowhere near as concentrated as what the Qs are. But again, you can see right there, it bounces again off 63. What happens? Stock market moves up right there all the way to the 83 area. Nice move up, as a matter of fact. Then all of a sudden we start to come down, reject off, right? The 80, and then, or 83 that is. And then what happens? The stock market does come down this time. We sell off. Right, and I guess the difference is when you see huge moves down and how many stocks, how fast they go below that 200 moving average, that's really your difference, right? But we bounce again, what happens? Boom, market goes up, okay? We go up to the top, what happens? We end up coming down, we sell down just a little bit, we hit the 63, and what happens? You get the bounce, okay? And so we're just in that range, so we could absolutely either go up or sideways, but that's a good point to see where we're at right there. We're at a bouncing point, okay? The other one is NVIDIA. Came down to exactly what we talked about on Thursday's video. Tested this area right here. I believe that's the 1064 area. Bounced from there, which is what you needed, right? Closed right below the 5-day moving average. Again, stocks are guilty as long as they're below it, but you know, above it is a good thing on this one. And the reason why it's crucial for NVIDIA to continue to go up. Remember, they had this stock split. Actually, before I get that, let me tell you this. They had this stock split, so we still got 2 full weeks of trading before the stock split. But I want to pull up Chipotle because somebody said, well, you know, the stock's so expensive, there's no way it's going to continue to go up. Well, Chipotle is way more expensive. $2,793 when they announced. And guess what? It kept going up, right? It's finally getting some selling pressure now. But yes, it continued to go up, and it's actually exactly 3 times the amount of what one NVIDIA share would cost you, right? But what I was saying on NVIDIA is NVIDIA actually accounted for 38% of the S&P 500's move right here since the first of the year. And you can see what the others accounted for. You got to add all the other Mag 7 up. It doesn't equal what NVIDIA has done for it. Just one stock. One stock. And so NVIDIA has to do what for S&P to keep going up? It has to keep going up, or at least not fall. That's for sure, right? I mean, that's pretty obvious. Now, looking at IWM, good thing for it. It closed above its 2023 high. This one is the 10-year dropped over the last couple sessions. Has done what? It loves it. I told you when the 10-year dropped, don't worry about the Fed funds rate. It's the 10-year if you watch Saturday's video, okay? And it closed really when the day was over. I mean, it's barely above it. So we'll see if it can hold it and turn that back into support. That's really going to be the key for the IWM, excuse me. But again, when you come over here, we'll look at moving averages to see how this is doing. The 50 so far is support over the last few times it's hit it. So that's a good thing. Again, these moving averages have not turned over, haven't rolled over, haven't flattened out. So that is a positive thing. If we pull up the 5-day moving average, you can see it closed, unlike the S&P NVIDIA, it closed above the 5-day moving average. And so that's a positive thing, as you can see. When it's above, bullish, below it, in question, right? But what's crazy, though, is look at this. IWM versus SPY. When it's going up, IWM is outperforming SPY. When it's sideways, it's holding its own. And when it's down, that means SPY is outperforming. We have come full circle, guys. We are back to the Dotcom level of IWM versus the SPY. I mean, absolutely full circle, as you can see right there, which is just almost crazy to me. But the IWM has changed a lot over the years. Remember, a third of them don't even make any money. I don't believe it is. They're definitely not profitable. But when you zoom in and look at this, it's followed this falling wedge pattern right here, right? And we're coming down to a major support level. So is this where the IWM will finally, in small cap, start to at least hold their own, right? And maybe outperform SPY. It doesn't have to outperform it handily to go up at all. And when you pull up a 10-year, this is the key for it. I mean, when the 10-year is roaring, IWM is not doing well, SPY is doing better. And when the 10-year drops, IWM can somewhat at least hold their own or maybe even outperform the SPY. Now, that leads us into Tesla, and pay close attention to this, especially if you're a Tesla shareholder or thinking about getting back into this one. And you can see, obviously, we are still setting in this little area right here we've talked about, anywhere from 172 to 187, but with all those anchored VWAPs, like wedging them in, all the moving averages, and we're coming into June, right? June is Tesla's best month. That's what they say, seasonality-wise. Why? I've tried looking this up. One is you got 2 peak seasons for auto sales, right? So you can have some good news coming in from March to the end of May. So we should have some good news coming in on deliveries, hopefully. Also, the big thing is on the 13th, you got his pay package. Suppose if they don't pay him those billions of dollars, Tesla stock's going to plummet. We'll have to see. And suppose it's going to rally on paying him billions. But let's go back to 2014 forward, and you see for yourself. June is a good month. That's 2014. You go up here to 2015, just count the red months, okay? You see another one up 10% right there. 2016, actually, this is going to be one of the red ones, right? Start off great, end up plummeting down 10%, so that's one red, okay? One red, we're going to count 10 years here. All right, 2017, just goes up 15%, sells off right at the end of the month, still closes up 10% right there. Then you go over to 2018, and you can see clearly this thing just rockets up right here, 30-something%, starting out the first 18 days, comes down, ends up being positive, like 20%, I believe it is. Go over to 2019. This is just a crazy month right here, right? Another 30%. You see July just kept going, okay? 2020, I hate to count it, but I'm going to do it anyway. Everything went up anyway, but that's around 27% right there. So that's a good month. 2021, ends up being green, shockingly. But yeah, ends up going to about almost 10% right there, even though it was a rough month. 2022, the stock market is in a crash. And yet, even with the stock market in a crash, and remember Tesla's looking rough right here, you still end up only down like 8% on the month. So that's 2 red out of 10 we're going to count here. Because here's 2023, just a rocket ship, right? Goes up 38% right there. comes down, ends up closing up around 37%, it looks like right there. And so now we're in 2024. So you see, last 10 years, 80% not only green, heavily green, and the red months, 2 red months, wasn't even that red. All right, so that's what I'm saying. I guess a lot of it's going to depend on this package or whatever. But again, this, and I've been saying, when it does finally move, when it's going to be an explosive move, right? Whether it's down or up, we'll have to see on this pay package thing. Oh my God. Let me know if you think they're actually going to vote yes on this thing, or if that's really going to affect the stock. But we should have more catalysts, right, for it. So you should start to see, and again, when you're being held, like compressed like this, that's when you know, if you look at Tesla's chart, it gets a big move in either direction. Most people think it's to the upside, so obviously watch 187, and then it's going to break that trend line right there around 194 if you get the move to the upside. If we get the move to the downside, go and be counting 158 right there. But you can see, depending on how you want to draw this, I mean, it's just wedging. It's just waiting. You can just see it. It's like a boiler or a pressure cooker, right? And so if you start to see those call flows come in, or put flows, whichever flows come in, the sweeps, that's what I'm talking about, not the blocks or any of that stuff. The sweeps start coming in, then this thing's going to move, okay? And so just keep that in mind. You get to see the seasonality of it and how it works, okay? In phase, another one. Big move so far coming off the bottom. Again, another one should have been wedged and everything, but you can see this right here. If it breaks up, what do you have here? A golden cross on the 50 cross of 200. It rarely happens on this one, but when it does, you usually get some big moves coming up on this one, okay? And so we just had one happen, all right? And so again, it does usually move pretty well, and these alternative energy stocks have been on fire lately. I'm not really sure why, to be totally honest with you. It's all about rate cuts. That don't make any sense to me. But again, it could be because another thing, the 10 years moving up, which hadn't made any sense to me why this has been going like it has. But if it breaks this right here, I'll guarantee you before I pull it up with the volume profile, it's going to hit a gap. And so if it breaks above 137.47, I think this thing's going to rocket all the way up to like 158, 160-ish, most likely. So pay attention to that one. And we'll end with crypto before we get into the earnings. Again, this channel and Bitcoin still holding well right here. Coming into this trend line right here, which was resistance, then became support. As you can see, we look on this right here, then became resistance again. So it's sitting right there. If it does break up out of this channel, I mean, yeah, watch out for 78,000 somewhere in there is what you're looking at. So just pay close attention to that. Again, a lot of people say this is an inverse head and shoulders down beneath right there. Well, if that's the case, they're saying, oh, it's inverse head and shoulders, this thing's going to like 90K. And I'm like, well, actually, when you look at it, the inverse head and shoulders, depending on where your neckline at, is kind of already played out, hasn't it? I mean, because it would be a crooked neckline coming down, and you're looking from your neckline to the bottom of the head down there. Looks like it would already played out to me if you estimate it. So that's why it started to sell back down. But again, this is another one. It goes with the market. If the market starts roaring up, Bitcoin is probably going to go right along with it. If it starts softening, that's when Bitcoin starts softening too. It's probably going to soften. All right. You look at stochastic RSI. I like to stay on the weekly, just keep things in perspective. Still need verification on this. Still needs to move up to really verify it, but it is in the right place. Okay. The momentum's in the right place. It's starting to move up. You rarely get any of those 3 to 4 a year, maybe. Ethereum obviously had that huge weekly candle, which is what we expected as soon as the ETFs, started talking about it. We don't know when they're going to trade or anything, and even they're going to get approved. If they do, you figure it'd probably be a sell-off to come down right there before moving back up. But 4,000, somewhere in that area, I mean, that's going to be major resistance for it. Again, it's rolled over on the daily stochastic. You saw the momentum kind of stall out right there, but on the weekly, you're basically where you want to be. If we go to the weekly and just look at it, it's the same thing as Bitcoin. Okay, you get very few of them on the weekly, but when you do, it's a good thing. All right. Now, looking at earnings, a lot of retailers coming out here. There's nothing, super major going to be happening here. You can see on Tuesday, there's a couple right there. CrowdStrike's going to be one. Obviously, those stocks I think have been getting hammered lately. You come down a lot of retailers like Ollie's, Dollar Tree's going to be another one, Campbell's. Lululemon's going to be a big one. This one's either setting up for a major bounce or a major drop. So this is a major support. And a lot of these discretionary stocks are, as I point out to the members, right? 5 and below, Victoria's Secret, NEO's going to be a big one. A lot of people expecting that to go to 650 because of the way the chart looks, big lots, DocuSign, and then you can look at really nothing else going on, especially on Friday. Now, you look at the expected moves, you're going to have some huge expected moves. GTLB, we're talking about plus or minus 18% on Monday. Look at charge point over there, plus or minus 18% on Wednesday. Neo, you're looking plus or minus 13%, and your retailers anywhere from 9 to 13% as well. Lulu plus 9 or minus 9%. And then a lot of economic data starting on Monday. We have a lot of red folder news, as you can see, with the manufacturing, ISM manufacturing PMIs coming out. So that'll be a good one. On Tuesday, you're going to have JOLTS jobs openings. It's still going to be soft or whatever. Remember, the yields, if it's bad news for the economy, the yields are going to absolutely drop because they're going to start and go, oh, look, they're going to do rate cuts, right? And if it's strong, yields are going to rise, and you'll see small caps and social transportation stocks. Wednesday, ADP non-farm employment change, same thing. ISM services PMI coming out. Thursday, unemployment claims. Friday, average hourly earnings, non-farm employment change, unemployment rate, put in the bottom. If you think that's going to continue to rise, I believe we're at 3.9 if I'm not mistaken right there. So we'll see if that stays the same or continues to rise or not. We've gotten past all the seasonality with their hiring for Christmas and all this crazy mess. So we'll see if that's going to continue to go up or not, as we've seen all this data come out showing, I mean, it's slowing down. There's no doubt about that. We've seen it, all right? And so we'll see if that's going to really start to affect employment. Remember, it is a very, very lagging indicator, way behind. They use old data on that stuff. But a lot of, I think, is really just going to be the PMI coming out and stuff for next week. And so we'll see how that comes out and everything. So hope everybody has a great week. Go ahead and hit the like and subscribe button on your way out. And I'll see you guys tomorrow.